Hey guys, and welcome to my YouTube channel. First of all, Merry Christmas to every viewer of this channel and a Happy New Year. I hope the new year brings prosperity and well to you and your family. This year has been pretty great from investments and earning point of view, and I hope that the coming year 2022 would be the same. With that, let's start today's discussion. Today will be sort of an exploratory discussion that I wanted to do while going into 2022. What all points that we could basically keep a note of while going into 2022 from investment point of view. How the market will perform in general for this entire 22 new year. So the first point I wanted to highlight in terms of India is the economic recovery that we have seen in 2021. 2021, we have seen companies project a very good sales growth and profit growth as well, and that will continue for at least 2 to 3 years. So next 2022 will definitely see a even higher sales growth, higher profit from companies projecting a very good growth. That is what called as economic recovery of India. And in general, to play this theme, we'll basically invest in sectors which will be beneficiary of this economic recovery. Generally, in historic trend, if you see, we have seen that during economic recovery, the stock market does not perform that well. It basically remains in the consolidated zone because the market would have already anticipated an recovery and already would have given that return. So, in a similar fashion, the market has already anticipated 2 3 years of recovery in India, and hence the growth in stock market that we have already seen. So market in general will try to consolidate. Like the Nifty, if you look at, will generally be in a consolidated zone. We won't basically rise above 18,000 that we have seen in 2021, and we won't go below 15,000 as well. Basically, it will be remain a range bound. But definitely we can identify sectors which are available currently at a very good value and try to invest at this point so that in 2022 we get a very good earnings from that, a very good returns from those particular sectors and those particular investments. So first such sector is banking sector. Banks generally tend to do very well in during economic recovery. Basically, what happens in economic recovery is the customer tend to buy houses, customer tend to buy cars. They take to basically tend to take loans, spend on luxury items, go to holiday. That is what a general economic recovery means. And in general, people mainly focus on real estate during economic recovery. But we will basically consider the back end of this economic recovery and we try to invest in the back end what happens during economic recovery. So we basically won't invest in real estate directly. We'll choose a back end option. So as I mentioned, generally people tend to buy homes and cars, and for that they take loans. So and that's why the banking sector generally tend to perform very good during this economic recovery. Now, if we talk about banks in India, only two names come up. One is SBI and the other is HDFC Bank. SBI definitely is a public sector, HDFC is a private sector bank. SBI, generally people tend to invest in SBI because it's a safer option. But in general, from my point of view, I generally tend to avoid public sector companies because of the high government intervention this particular companies has. The government takes various decisions due to which the stocks fluctuate a lot. And the entire aim of the SBI or a public sector company is not to focus on the growth of the company, but to focus on the growth of the people. And hence, in general, I tend to avoid this particular public sector domain, whether it be IRCTC, which is like a monopoly business, but still I don't have in my portfolio just because of this reason. So the only option that remains with us is HDFC Bank. Now, in general, banks are very tricky to understand because of their complex structure, because of their complex nature of doing business, and hence doing a fundamental analysis of banks is generally very much impossible from a non-financial background point of view. Like hence, we'll basically pick up the bank which is the most favorite bank, HDFC, most favorite of people also, and most favorite of investors also. Many of the investors believe on the management, which is led by Puri sir. So if we want to understand the fundamentals of the bank, it will be sort of difficult. Hence, we'll try to understand technical from technical analysis point of view. Is it a good time to enter HDFC Bank? And let's focus on that. So HDFC Bank, so this is the technical chart that we have open for HDFC Bank. I have my normal indicators in place, which are nothing but simple moving averages, the RSI indicator and the volume indicator. To look at the chart at a daily level for HDFC Bank, we see there has been constant growth, and we love such stock wherein the growth is not very like a very at a one point it's a spike, but it's a consistent growth, and hence basically it's a very good choice of investments in such stock where we see consistently your money is growing and not at a rapid pace and then just goes down. Now, if you look at this particular juncture, it was around 1200 levels, pre-COVID levels. This were 1200 levels, and there was very huge drop. So even if it reach at 1300 levels, we are at the pre-COVID levels. It has given us a rise till 1600s, and then it's had corrected quite a lot. Now currently, it's trading below its 200 exponential moving day average, trading well below its exponential moving average, and it's available at a very good price. And if you see the support line that I have drawn, we can see that if you look at this, there has been a constant bounce from this level. So this line, so if you see this particular line, there has been a attempt to breach this line, but never have breach this line. So this particular line will act as a very strong support, which is at 1381 level. So generally, 1400 levels will be a good point of entry for HDFC Bank, and currently it's trading very much in that zone, and it can anytime come to 1400 levels, and we can enter this particular stock. Now, one more advice that I wanted to give is generally during this time of volatility is not a good idea to average your stock because the volatility in one day the stock is up 5%, the next is the stock is down 5%. So in an all at the net, if you look the return on it is pretty much 0%. So generally, during this time of consolidation, it's not a good advice to average your stock, but to add stocks which don't have in your portfolio. Strong fundamentals like HDFC Bank, if you don't have in your portfolio, you can make a fresh entry at this level because this is a very good level to make fresh entries. If you want to average it out, you can wait a little more time, let it settle down, and then we can make a average decision. But if you want to make fresh entry, I think this is a pretty much good point to make fresh entry. Even if you want to do average, and I'm not sure at which point you would have bought this stock. Let's say you have bought at a very high level, let's say at 1600 level. If you would have bought this stock, then we can average at this particular point because it has corrected a lot. But let's say if you have entered at 1500 levels, then we can wait some more time to average the stock. But if you don't have in your portfolio, you can definitely make investments, fresh investments in the stock. So generally, this is a very good level. At this level, HDFC Bank is a very good bet, according to me. So first stock, I think banking sector would be a very good investment from economic recovery point of view. It will be very good bet in 2022. And in banking sector, HDFC Bank seems to be at a very good level to make fresh entries in. Now moving on to next sector. On to the next sector, I think with the corona variant, and there is a lot of noise about the corona variant, the third wave in India. 2022 will again, if it sees the same pattern as 2021, then this month, January, February, March, I think will be a very difficult month for India with the third wave already in place and the Omicron cases are rising. So there is a pretty much dicey situation from an investment point of view, and hence we basically want to invest, and hence we definitely want to invest in such sectors which are pretty much neutral to such news. And banking is one such sector which won't affect that much with the third wave. And there is one more sector, I think, life insurance sector, which will be sort of very much it will be a sort of a neutral, it will be a positive. The corona news will be sort of a positive for it. But if the corona doesn't come, then also it's sort of stable. And because the overall increase in the nature of the awareness about health insurance, life insurance, and such basic, and also the LIC IPO in place. So in general, the life insurance space will be sort of we can see a sort of a boom or a rally or growth, good growth in such companies. And definitely one such company in India is HDFC Life. HDFC Life, again, if you see technical chart of it, let's try to understand if it is at a good level currently. So HDFC Life, if you see, so again with the same technical patterns, the stock has listed around 2018. It has bounced many times from these levels, which is around 350 levels. So 350 is a very good support for this stock. This next support is this level, which is at 561 level. Currently, it's trading at 637 level, and we can see. This is the Corona time, which is this one, 2020. I think this was the Corona time period, and pre-COVID, it was trading around 630 levels. So this is currently it's trading around pre-COVID levels. So, and definitely we can see there is a downfall from it was on a path of a good growth. It would have, if you have, if you have already purchased the stock, there is no need to average it. But if you haven't purchased the stock yet, this is very good opportunity it is bringing because it's already at a pre-COVID level. There is a lot of good potential growth that we can see in this particular sector. If you look at the volume, we can see there is a strong volume over here at 561 levels. So 630 is again a very good point of entry, but 560 would be sort of a good point for average. So if we have already bought it, I think 560 is the level for you to wait. But if you haven't bought this stock yet, I think 630 is a good point for entry, and for them also 560 would be a good point to average. So I think HDFC as a whole group, I'm suggesting for 2022, which will be a good both in banking sector and life insurance sector. I think for an economic recovery point of view, this too will play out very well. Also, there are a few other sectors that I'll basically cover in upcoming videos, definitely. But from a good company's point of view, from a good investment point of view, I think banking sector and life insurance sector that we have identified would be a good bet. And the stocks are also available at a very good levels for fresh entry, not for average. And hence, I think for now, the bet that we could identify are two stocks, which is HDFC Bank and HDFC Life. So I hope it was a very informative video for you. I hope you gather knowledge. I would highly recommend that you do also do your own research before making an investment into particular stocks. In upcoming videos, I'll definitely try to cover more on how which sectors that we can focus and which companies particularly to focus if you want to play out the economic recovery card and want to make wise investments. So that's it from this video. I hope you enjoyed it. I wish a very happy new year to every one of the viewer of this channel, and do take care during this COVID times. It's very uncertain times, and I hope the third wave is not as dangerous as the second wave that we saw in India. Thank you for watching this video. Take